Hello and welcome to my channel. Today I'm going to talk with you about two interesting stocks, and the first one is going to be Adobe. If we take a sneak peek at Adobe, we can see that it has been performing really well over the past couple of years, basically since the early 2000s. It's currently at a price of $435. If we look at the chart, we see that it has been going down two times in the past couple of years. First time was a drop of around 61%, and the second time was a drop of lowest point around 36%. And we see it has been going up a little bit since that lowest point. So today I want to discuss whether Adobe is an interesting stock or not. And to do that, we first are going to look at the financials. Why? Because the financials are one of the most important things if you want to invest in a stock, because you need to know how the company is doing. So we're going to look at financials, and we're going to see a couple of things. Let's start at the income statement. Ideally, we want to invest only in companies who have growing revenues and profits. And if we look at this chart from 2020 until today, we see that the revenue has been going up from 12 until $21 billion. The gross margins are also really high, above 85% since 2020. I normally don't invest in companies with gross margins lower than 40%. If we look at operating margins, it's above 30%, it's also looking good. Um, and if we look at net income, we see it has been going up a little bit, but just a little bit stagnant as well. Another important thing to look at is are the share count, how many shares are outstanding. If a company is buying back shares, that's good for the company and good for you. It means you own now a bigger part of the company, so also a bigger part of the profits. If we look at the diluted shares outstanding, we see that it has been going down from 485 million until 449 right now. So that's also a good sign. The next segment is going to be the balance sheet, because we don't want to invest into companies that have a lot of debt. Now, if we look at the current assets, we see 8 billion. It has been going up from 8 billion to 11. And the total assets also from 24 until 30. The current liabilities are 10 compared to 11. So not that big of a difference, but still more assets than liabilities, which is good. The total liabilities are only 16, while the total assets are 30, so almost two times. So that will be covered really well. Next thing we're going to look at is the cash flow statement. Also very important. You want to have a company that has a really big cash flow going on, free cash flow. And we see that the free cash flow has been going up from 5 billion until 7 over the past years. It's also very looking very good. Then the last thing for this right now are the ratios. And ideally, you want to have those ratios above 10%. It's also very good right now. And the next part is, of course, the valuation, because if you see the company has growing revenues, growing profits, then you want to look if the valuation is good, because if the valuation is not good, you don't get a good price for what you're paying for. In order to do that, we look at a couple of things. The first one is the price. I want to show me the price. I want the chart to show me the price, and I want to see forward PE ratio. You can already see that the forward PE ratio right now is 21. That means the forward PE ratio is of course different than the normal PE ratios. Basically, what do we expect the earnings to be in a couple of years, in the near future, and then we are going to compare Adobe stock to right now to what it was in the past. The blue line is the Adobe price line. You can see the price going from $600 until in the low 400s right now. and the black line is going to be the forward PE ratio. So if we took a look at the 1 year chart, we can see that the highest PE ratio was 35, and it's currently sitting at a little above 2021. The lowest point was below 20. Of course, this is what we can see in the chart because we see that Adobe has been going down since beginning of 2024 until now. We checked it was 36%. That is, of course, also why the valuation is going down as well. If you take a look at the 3 year chart, because we want to see things in a broader perspective, we see that the highest one was 38, and the lowest was also a little bit below 20, below 19 actually. So we basically see that this PE ratio right here in January this month is at the lowest point since October 2022. That was in the bear market. Now, if we take a look even further down the line or back in the past, we see that the highest PE ratio, forward PE ratio, was more than 50 actually, more than 50, more than 51. So if we compare the stock right now to the valuation of 5 years earlier or 10 years earlier, we see that the PE ratio right now is at one of the lowest points in history. So that is looking good. Um, the next thing we're going to do is look at the outlook, because it is good that the company is growing and it's good that the valuation is not too high. But that could also just mean that the company is not projected to make good earnings or good profits. So if we're going to look at the investor relations page of Adobe itself, now we click on the earnings press release, the latest one from December 2024, and then we see a couple of things. First, they are talking about the presentations from 2024, how they were doing, and then they're going to talk about the financial targets for 2025, and that one is really important for us. We see they aim for 23 until 23.5 billion dollars total year revenue. And if we look back, because we want to know how much it was in 2024, and then we here it is, 21.5 billion dollars. So we can see there is still some growth happening in 2025. They expect growth. They expect earnings per share to go up to 15.8 until 16.10. And if we look here, then we see that the earnings per share was 12.36. So that is definitely higher as well. Now we expect operating margins of 46%, tax rate 80.5 is also good. Diluted share count of 433 million. Well, if we look at this one here, we go back to the financials. Then we go to the income statement. We see that the shares outstanding have been going down from 485 until 449. And they are talking about 433. This is a good sign. That means Adobe is buying back shares of the company, which rewards you as a share owner. So you can basically see that the targets are good. They're expecting growth in 2025, even though the growth is not that big. They still expect growth. So what's the problem then? Why is stock going down? Well, in order to look at that, we need to talk about the threats of the company. And one of the biggest threats is, of course, AI. Adobe is a software company, and what does Adobe? It offers certain programs like Photoshop and software to edit pictures and videos. And the threat is, of course, AI, because AI can let you just make a picture or video out of just words. You can just write down a word and say to AI, hey, hey, I want you to make a picture or photo of this. That is seen as a really big threat by the market, and that's why Adobe has been going down. Then it's a question, of course, what is Adobe going to do about it? Well, the biggest thing they're going to do about it, or they're doing right now, is they're working together with AI. So you have a very famous saying, if you cannot beat them, join them. That's exactly what they are doing. You can see it with this button here, generate with AI. So Adobe is already integrating AI into its services. And you see here, generate picture. If you click on it, you have the option to generate a picture. You can just write something down, describe what you would have want to see. Okay, I want to see a beautiful lake at the sunset. Let's write something random and see what it comes with. Now, you see it's taking its time, it's loading, and now I just created it out of nothing, out of nowhere. So that's a very good sign. I don't think Adobe is going anywhere anytime soon. It's a very strong company. They have a good balance sheet. They have a good earnings forecast. And the fact that they are just integrating AI into their services means they just are like changing with the future, because the future is going to be AI. But I don't think this company is going anywhere anytime soon. So it's definitely an interesting stock. Um, this is of course not financial advice, but this is a very interesting stock, and do your own research. But this is certainly a company that has some magnificent qualities. Okay, the second stock we're going to discuss is going to be Advanced Micro Devices, or AMD. Of course, none of this is financial advice. I'm not your financial advisor. Always do your own research. Advanced Micro Devices is a very famous semiconductor company. Um, and if we look at the chart, we can see ups and downs. The last peak was in 2021, peak of the bull market. Then it went down 66%. Of course, it had a big rally, and now it is down, um, let's say, almost 50%. Um, and if you look at the chart, you see a very big, clearly a very big bull flag pattern in the making. Okay, we are going to look at the financials of AMD. First, we're going to start with the balance, no, with the income statement. And if we look at the income statement, we see clearly really high revenue growth. We started 6 billion 2019, and we're up to 24 billion at the moment. The profit margins, the gross margins are above 50. They have been going up since the last few years. If you look at the diluted shares outstanding, we see an increase. That means AMD is rewarding its personnel very well. Of course, it's not very good for shareholders, so you must take a close look and make sure it does not get up too high. Next thing we're going to look at is the balance sheet. Does the company have any significant debt? And then we see total current assets $18 billion and total assets $69 billion. We're going to compare the current assets with the current liabilities. 18 billion versus 7.5 billion. So more than double. And if we compare the current assets also with the total liabilities, we say total liabilities 12 billion with the total assets at 69. So that means the total assets are enough to cover, even the current assets are enough to cover all the liabilities. So that's looking also very good for AMD. Cash flow statement, how much money is flowing in and out of the company. And we also see a growing rate. Cash flow has been going up significantly from 2019 until right now. Last but not least, the ratios. We see the ratios are worse than the first stock, Adobe. So they're not as good, but still it can be worse. The next thing we're going to look is the valuation. And I take two things for that, of course, the price and the forward PE ratio. If you start with this year, of course, we see that the PE ratio has been coming down. That's also because the stock has been going down. Stock price of $210, PE of more than 50, almost 58, and it has been going down all the way to stock price of 116 and the PE of 25. It's currently at around 27. We want to compare it to its best, um, and then we see that the PE ratio has been all the way from 35 until 14, and then up into the 50s. So if we compare to the past 3 years, we see that the PE ratio is not at its lowest point, but also not at its highest point. Then we're going to look at the past 5 years, and then we see a similar view. It's not at the highest point, also not at the lowest point. Um, so this is basically a mixed look. The valuation could drop some more, then it would be better, of course. But still, for a PE ratio of around 25, 27 is, as you can see, lower than the mean, lower than the mean PE ratio over the past 5 years. Then, of course, we want to know how the company is doing, what it is projecting for the next couple of quarters. First, with the third quarter report from last year, October 2024. Then we see a couple of things. Revenue 6.8 billion, gross margin of 50%, operating income 724 billion, earnings per share 0.47. So this is all looking good. These are the financial results of the past quarter. Then the four segments. So AMD is split between four segments, and here we see the revenue of the four segments, results of the four segments. And as we can see, the first two segments, data center and the client segment, have been going up, and the last two ones have been going down. Primarily gaming. Gaming has been going down a lot, 69% year over year. And I think it has a lot to do. It has a lot to do with the fact that during a few years ago, during the lockdowns, people were bored, ordered a gaming console, ordered all kinds of accessories for gaming, um, and those stuff you buy once in a few years. So that's why gaming has been going down. But in a few years, maybe this year, maybe next year, people are willing to spend more money to repair or to buy new gaming equipment. So I have a reason to think that the revenue for gaming can go up this year or next year. If we look at the outlook, fourth quarter of 2024, the earnings are, by the way, in February. It expects to make 7.5 billion plus minus 300 million. That would mean a year-over-year growth of 22%. So this is looking good. If we look back at the AMD chart, we see it has dropped 50%. It means it's creating new opportunities for new investors who are willing to pick up AMD for a cheaper price than last year. Again, this is not financial advice, but AMD is definitely a stock worth looking into more. Do your own research and decide for yourself whether you find this stock interesting.